how you own it is. I want to bring in now Wall Street Alliance Group, a partner there, Aadil Zaman. And Aadil, so that statement, what exactly does it mean? So you say you got to have exposure, but you're sort of saying how or why?
Yeah, so we see it's not a question about having AI exposure. You must have AI exposure, but we think that there are different phases in the AI exposure. And we think that the first phase is a bit overvalued right now. The hyperscalers, they've gone up a lot. Phase 2 and phase 3 is where we are seeing a lot of opportunity.
All right, so AI, the dominant investment theme right now, the cycle, and you're saying this is a critical transition point here. Is that because you're shifting from that first phase to the second phase?
Yes, because we think that there's more opportunities in the second and the third phase, right? Which is where we are seeing the AI enablers and the AI beneficiaries. That's where we are seeing greater opportunities.
Semiconductors and hyperscalers almost speak for themselves, right? These stocks have gone higher, but you could have argued a week ago, a month ago, 2 months ago that, okay, this is crazy, they can't go on. If someone's in these stocks, do they get out now or do they sort of scale back a little bit?
Yeah, I think the most important thing when it comes to the phase 1, which is the AI winners, which is what we are talking about, is position sizing. One of the biggest problems we see when we're dealing with prospective clients, and they send us statements and they have more than 20% in NVIDIA, right? So you want to make sure you're sizing your positions properly, not more than 5% in any one stock. You don't want to miss out. Position sizing is important here.
Enablers, now I got to tell you, Caterpillar's got to chart that revival any semiconductor stock right now. I think it's up well over 100% in the last year. But these are the names that are now starting to implement it, or they're benefiting, I guess, mostly from data center build out?
Yes, absolutely. So yes, you're absolutely right. Some of them are already showing the results. But these are essentially, Charles, the brick and mortar companies that are building the infrastructure behind AI. So we do think there's more momentum here. Caterpillar, we own for clients. They're involved not only in building the data centers, their equipment is used in running the data centers.
Right, the power.
Yes.
A name on the beneficiary side is a deer. How would this be different than, say, for a Caterpillar?
Well, so now when we talk about beneficiaries, these are real-world companies that are actually applying AI, and they're experiencing meaningful productivity increases, right? And it does not have to be like a very cutting-edge company. John Deere, which is over 100 years old, what they've managed to do is that they have implemented AI into their tractors, so they are able to spray the areas of the field that have the weeds as opposed to the whole field. So it's driving cost benefits to the farmers and productivity gains for the company.
We keep hearing about productivity and the next productivity miracle coming from AI, which was really great for the market back, and when Alan Greenspan used to talk about it a lot. How will we know? Like, you think companies will go out of their way to make sure we know, okay, we've been able to implement AI and have productivity gains that we can see in the margins?
I think we'll be able to see it in the margins. I think the earnings are going to be reflecting it, and this is what we've been seeing with John Deere, a company that we have for our clients.
Now, you like international, you still like international. Obviously, the international trade last year did extraordinarily well. Coming out the gate this year did extraordinarily well. After Epic Fury, everything was sort of flipped around. I think those hyperscalers and semis also were de facto safe havens for investors. You think we're going to go back, though, to international outperforming?
Yes, absolutely, Charles. We think that this is one of the most under-owned and underappreciated sector. When it comes to the performance between US and international markets, it tends to go in cycles. And we are coming out of a 14-year cycle where the US markets have dominated.
Right.
Last year was the first year when this cycle changed. We think that this continues and this has legs.
What is it based on? I started this segment showing how much more S&P earnings guidance has been compared to the rest of the world. Is it just a function of just valuations, or just a typical rotation? I mean, what's the underlying reason for this?
It's all of the above, right? It is a cyclical change. When the dot-com bubble burst, for nearly a decade after that, internationals dominated, right? So we do think it's a cyclical change, but it's also a diversifier. If you look at the IXUS International ETF, that's about 17% information technology. Compare that to the S&P 500, that's more than double.
Right.
So we do see an opportunity.
Great stuff, Aadil. Great seeing you.
Good seeing you.
All right, folks.